For those of you who are new here, my name is Forrest. I invest in stuff I think that everybody should. That's what my channel is about. But yeah, so want to say a little intro for yourself?
Yeah, thanks for the introduction, Forrest. So, hey, everybody, my name is Sol. As introduced, I've been trading for almost 2 years now, actively in the futures market, options market, primarily focusing on the S&P 500. I also dabble a little bit in the NASDAQ. But before I was actually trading the stock market, I had a few years of experience with cryptocurrency, nothing crazy, just kind of investing during the, whole pandemic and a little bit pre-pandemic action. So, but yeah, anyways, some stuff I like to trade. Like I said, I like to trade the E-mini futures, which is part of the S&P 500 futures market, NASDAQ and Q, which is also part of the futures market. I like to trade a little bit of oil here and there. It's a market I'm starting to delve into and branch out a little bit into commodities such as natural gas and oil. But primarily when I'm speaking strictly for day trading or short-term regular trading where I'm just looking to make a scalp or make some daily profits, it's going to be mostly on the ES market. So
Yeah. And I mean, I always advocate for futures now. I started with options. I traded options for years actually. And I literally just started doing futures recently. And I feel like I did that backwards, but that's just due to, how I discovered trading. I think a lot of people, which is just seeing people make a gajillion dollars online, right?
yeah,
And a lot of that is options. You don't really see people posting huge wins from futures, or you do see it like leverage and like Forex and things like that, but that space can be kind of scammy, or very scammy actually, to be honest.
yeah,
But
yeah.
cool, man. Well, so you went from crypto and then now you're doing, commodities and futures.
Yep.
What do you think I mean, I have my opinions, but I'm just one guy. So what do you think like new people should start trading?
What do I think they should start trading? Good question. So, honestly, if I had to redo everything from scratch, if I was a new trader without a single piece of knowledge, first of all, I wouldn't touch real money. I genuinely would do some paper trading just for a few months till you kind of get some intuition with the charts. And when I would move to real money, I would maybe trade something that's like a leveraged ETF or micros on the futures market. I really would not recommend trading options. I think the problem with the options is people come into them, they don't have an understanding, like you said, of the Greeks, or, it's too confusing for them to understand how delta operates, what is GAM exposure, what happens when the market moves against you in an options trade and you're in a zero DT. What does that loss look like? How do you manage that? How do you hedge losses like that? So I feel like for pure price action beginner trading, just directionally, it's very simple to say, hey, is it going to go up? I'm going to bet long, go long in the futures, or if I think it's going to go down, I'm going to bet short. Very simple, 2 buttons. And then you have your expected loss and expected profit as well, because it's purely tagged to the price. There's no Greeks involved. It's if you're trading a long position on the ES market, let's say you're at 39.50 and you enter long at 39.50, if you hit 39.45, you lose 5 points. And if you hit 39.55, you gain 5 points. It's very simple.
Yeah, that's a really important point. One, you hit the nail on the head that most people who trade options don't understand them, right? They think about the upside, but they don't understand exactly how and when those gains come into play, right? When gamma applies, or even just intrinsic value, right? Some of the simplest things in options, most people really don't know and have it internalized before they start slinging them, and then they're just burning premium, right?
Yeah.
They don't really understand why they're losing money. Whereas, you could be right a lot of the time with options, but that aspect of theta and time can really crush your P&L. So
Exactly.
I mean, it's a double-edged sword, because I've made most of my huge wins. Actually, all of my huge wins are from options.
Oh, same.
But
Don't get me wrong.
all of my huge losses are from options too. So I think the flip side of that is discovering futures. And what I like about futures and the leverage there is the idea that as you get more and more contracts and really can start to go long in positions, I mean, you can not easily, or I guess I could even theoretically, haven't shot for that yet, but you can make 50, 100K a day in futures. It's just a different type of trade entirely, right? So yeah, cool, man. So before we talk about risk management, or I guess we can just jump into it for the sake of time. We can definitely circle back. Um, but yeah, let's just talk about risk management in general, and I'll kind of, just bounce off of you and kind of, let you run with it first. But, what do you think is, what would you tell new traders or all traders about risk management, and how do you manage risk just in general, and then specifically while you're in a trade?
So, I mean, just to quickly go into the options talk too, because when I first hit I doubled my portfolio in a day when I first started trading the stock market with options. Yeah, with long options, and I lost it all literally within the same week, all my profits. So, that goes into talking about risk management here. If you're trading options, for example, it depends on what your expiration is, what your, if you're long options, which means you're the buyer of the contract, you're buying the call or you're buying the put. Obviously, theta is your main enemy. And if you're selling the options, you're selling premium or also known as shorting it, then theta is in your benefit. So it's a different game. But if I'm playing long options, which primarily I like to stick to, weekly is like 7, and recently zeros because of the market volatility and the fact that I can put in maybe $100 and possibly get lucky and have like $1,000 out of it, 1 in 10 return with some of these huge swings. I would generally say for zeros, expect most of the time 100% loss, when you're in that position, just because of how volatile. It depends on the market conditions. If we're talking about right now, the market's extremely volatile. Just one quick swift move against your direction could be a 20-point, 10-point candle, if not 20-point move. Your position's already done by 70%. So I would definitely not put size into it. I would play small and look for bigger wins. And this is kind of how a lot of people, when you want to talk about betting at anything, because at the end of the day, when you're trading, you're basically betting on direction or some outcome to occur in your benefit. There's 2 ways you can do it. You can go big, so you can use a lot of leverage and go for very tiny movement, right? Tiny wins, and you'll have probably a higher win rate with that. But that's also difficult. But you could also do what I'm saying, which is put a little bit in. $100, you're looking to make 500. $10, you're looking to make 50, or $30. So like a 1 to 3, 1 to 2, 1 to 5, instead of having $1 risk and looking to make like 10 cents out of that $1. So you're gonna have a lower win rate. However, it's probably going to be easier as a beginner to manage that risk and, have a wider stop, for example. If you want to talk about futures, going into futures and how I manage my risk for that, because that's primarily what I focus on. I use volume profile analysis when I trade. So I trade off levels, and you already have this on your chart, for example. So let's say I'm looking at a trade at 39.62.75. I will literally place my order at 39.62.75, trusting my levels. And then depending on what the order flow is saying, because I use tape reading, and for me, what tape reading is, I use Bookmap, which is a heat map visualization tool of the tape. I will look at where players are positioned in the day, and most of the time, you can kind of figure out where everybody has their stops likely set, or where the market will stop at a level like 39.65 has a bunch of orders. It's probably gonna stop at 39.64.75, or 39.70 has a bunch of orders, is probably going to stop at 39.69.75 or something like that. So you can kind of position your stops on a technical basis like that. But most of the time, if I am, day trading, I don't look to have larger than 5-point stop, 10-point if I'm looking for like a 10-point move. So I keep it a 1-to-1 for the most part.
Yeah, and there's a few things that, before I forget, I'm going to touch on there. So one is, yeah, if you're a newbie, I definitely recommend just smaller position sizes. Don't go for I'm going to go for 1% on a huge position. Instead, go small positions and then go for your 100%ers, 200%ers. And you'll actually do better in your P&L. It is almost a logical fallacy to go and say, all right, I'm going to bet 10 grand and try and make 10% and make $1,000, versus saying, I'm just going to risk $500 and try to turn that into 1,500, right? Especially if you're looking on ES. I mean, there's plenty of opportunity here, and so the idea of turning 5 and 1,500 very possible. To your point of theta too, let's just imagine you had a zero DTE Friday as a put at any strike. The strike's irrelevant, right? Let's just imagine you got in here, right? This is a 5-minute chart, and so before we actually got back down to the low of the day, you would have had to wait around 1.5 hours, right? And then during that time, even though you were right and that drop eventually came, the outcome of that trade would be way worse than if you got in, right here. And so timing becomes everything, and it's entirely different from being short in futures, where you could literally just hold this all day and you're going to go from green to red, and there's probably a better entry. But the point is, you're not, your basis isn't getting eroded away.
Yeah, exactly.
Stops too. Get asked this all the time in the Discord, where should I put my stops or vanish trades? As a newbie, you need to be focused on your capital preservation and your overall win rate. And I say this from experience, right? If you're getting too fixated on trying to hit a 1-to-2 win ratio or a 1-to-3 win ratio, instead of just going for 1-to-1s, you will lose a lot of trades. And you're like, well, I'm managing my risk appropriately. It's like, okay, well, you've lost the last 4 trades. Your last 4 1-for-3 trades netted you $0. So maybe you should focus on wider stops, and it's technically a 1-1, but the thought experiment I say is like, imagine you have 100 winning trades in a row and they're all 1-1s. Don't change anything. If anything, try to go for 1.2, 1.5, but don't chase this like bigger hold when you don't have a win rate that makes sense. So it's never a one size fits all. There's never this is something that I'm always thinking about too, of like options versus futures, entries, where your stop should be. There are general rules that you should follow as a newbie, but as you become more experienced, I always tell people, like, you really, really need to think about this as a game, right? And just like any video game, it's like, where can I get outside the level, right? How can I reapproach this as like, okay, now that I understand the system, how can I break it in my favor, right? And that's where you can find more and more edges.
Exactly. Yeah, and to elaborate a little on that, I completely agree. I mean, if we were to talk about risk management, man, this would be properly delved into it. We'll be talking about this for hours, honestly. Yeah. That's how deep it is, because, like you said, it's not one size fits all. And another good point you made is that as a beginner, yeah, you really shouldn't be focusing on these 1-2, 1-3 returns. You should focus on being, more accurate, having these 1-on-1s. Statistically speaking, if you're a beginner, and you're probably, you're just going to be mediocre or average, as most people would be. So 1-on-1s naturally is going to have a higher win rate, right? Statistically speaking, if you're going for like a 1-to-3, 1-to-4, most people are going to be looking at a 30% win rate. And, there's strategies that are, once you get more experience, there are ways to make money with that higher risk reward. Don't get me wrong, but like you said, you need experience for that. You need to know the setups. You need to know what to look for. And once you have a lot of experience, you can kind of jump around, and, you could do a 1-on-1 in this trade, or you kind of know this might be a 1-to-3, or this might be a 1-to-0.5 type trade. So, but that's something, like you said, as a beginner, you should really just be focused on more of like a 1-on-1 trade, and just not like chopping yourself up. That's another thing too, in terms of risk management with the stop loss that you said, have it wide enough so that you don't get chopped up. And how I would actually, if you want to talk a little bit about statistical analysis, because I do use that in some of my trading.
Sure.
I use, for example, let's say the VIX is at 20, right? I will have the expectation that the market will have on average, much smaller candles in the 5-minute, let's say the 5-minute time frame. It's not going to have 10-point candles. It's probably going to have like 3 to 4, maybe 5-point candles. When the VIX is at 25, expect to add another 50% to that number, and then another 50% if the VIX is at 30. And another way I would talk about in terms of risk management for locational trades, where I'm going to take them every single day. Currently we're in the market, a VIX environment of 25. I normally like to take 1.5 or 2 times that. And that's how I know roughly what the market's range is going to be for the day. I have this rule, and a lot of other traders, most traders have this rule for day trading, which is the 80-20 rule, which is 80% of the days are going to be in a consolidation range, and some kind of, you want to talk about a game and some kind of like levels. There's a ceiling and there's a floor. It's not going to get through that, or by any, strong deviation. It might get a little bit, but nothing crazy. So that's 80% of the days. 20% of the days are going to be trending. They're going to have, these strong trend, directional trends where one side of the market is heavily imbalanced. That could be buyers, or the other side, sellers, is heavily imbalanced, and we just have like a limit down date. But so I adjust my risk according to those factors. And, like you said, have a wide stop. Don't look for having a 3-point stop to make 12 points. You're going to get stopped out a lot. If you're experienced, you can, eventually fish something like that out, and then the one win covers all the losses, and then, make profit on top. But that's, as a beginner, it's not something you should be doing until you have a lot of experience with levels in the market and how to read where the market's likely to pivot off of in general.
Yeah, and you really hit the nail on the head about having an order. That example, right, where let's say you have a short entry up here at 39.62 or whatever level you would have marked, right? And you see some wicks here that are punctured this, so your level might be different. The point is you've identified that upper limit, and you just have your order sitting there. And I was annoyed I can't remember if it was Friday or Thursday, because I missed. I was off like 3 times in a row. I was off in that range, and I just didn't get in. But instead of chasing, right, I just waited, and then I eventually caught, some orders later in the day, and I'm always working on that entry. But most of the newbies, where they'll get in is they'll diddle in the middle, right? Fiddle in the middle, whatever you want to call it, right? And it's not a bad strategy, right? There are people who are confirmation traders, and I do momentum trades. I do all the types of trades. What I really want to talk about are those high confidence trades, and those high confidence trades where you can really, really just immediately be green is when you just have your trade sitting there, and you essentially have a plan, you have a thesis, and you're waiting to see if that plays out, right? And which is a very different trading style than what a lot of people do, which is why they have so much trouble with trading risk, where it's like, new candle, oh crap, got to get in. Different candle, okay, got to get out, got to get in, right? And it's this candle by candle play where you should be doing candle by candle analysis, but you should generally have a thesis and try and execute that plan. And the benefit is, one, you're freaking out less, and two, you can actually make a lot more money on those trades because you can hold them for much longer, right? Especially if you're getting up to like 3, 4, 5 ES. You will be sweating bullets if you put 5 ES on and then you immediately read 3 points, unless you have experience. I did want to ask you to touch briefly on, we talked about order flow. We don't have to go crazy into it because it's its own long discussion, but let's say we get up to this 39.62 level, right? And you're looking at order flow. What do you mean by that? What exactly are you looking at on Bookmap? What is it showing? And how are you using that to adjust your entry once we actually get up to this level?
Yeah, great question. So what I would look for if I got there and I'm looking for a short position is, are players adding asks or offers above? And where are they positioning them? Let's say we have this level I'm entering here, and then there's a wall, a big red wall I would see on Bookmap. Let's just say there's 300 ES orders there, 300 lots, right, on 39.65. But there's nothing above that. That's like the ceiling, essentially. There's nothing on 39.67. There's nothing on 39.69. There's nothing on 39.72, 75, so on and so forth. That tells me the market doesn't have that many sellers above anymore, right? So once this kind of anomaly occurs, I guess, whatever you want to call it, that's likely going to be the ceiling. And you can kind of tell it is, because you'll see people trading up right into that level, right? Let's say it's 39.65, for example. They'll trade right up to it, but oftentimes they'll front run it, right? So they'll be shorting in front of it, or they'll be selling in front of that big player, whoever that is, putting their limit orders on those big levels like that. And then the market will reverse. And the same goes for when you're the buyer, the market's going down. So, basically I look for, are they adding more liquidity higher or lower? Are they stacking it on top of each other? And another way you can also, if you zoom in, and you really have to zoom in to see this, so it depends how you like to trade and how you like to scalp, but if you zoom in Bookmap, for example, or you can look at this price ladder or whatever you use, you can see how people are adding bids or offers to support their move. So let's say we're moving up in price, you will see, let's say we break out a technical level, let's say they have a 39.65 sell wall, and then we break it, and then somebody immediately adds bids 3 points lower, like a big bid support wall, if you want to call it. That's going to continue to push the price further up. And then I would look for exhaustion, because normally this isn't always true, but when you're going up in the market, again, it depends in the situation, what day it is, what time it is, but normally when you're going up, I tend to think of the market kind of losing steam from buyers, and it slowly starts to roll over. Ultimately, it does like a rollover in many cases. And if you're going down, you have a lot more V-shaped pivots. Even if you're going like super far down in the market, like let's say we have a 100-point down day, I bet you, throughout the day, there's going to be some like sharp V's, which is why, again, when you were talking about risk management and chasing these candles, I mean, if you look at every single candle here on this chart that you're looking at, look at the wicks and where they are. If you chased every single move, I don't care if you're going long or short, every single time beginner traders enter a trade, they enter at the bottom or top of the candle. And you can see these wicks, they're pretty brutal. I mean, if you enter at the bottom of, like, let's say that,
Yeah, I mean, this is even right here, this is a 8.5-point top wick here.
Exactly.
Yeah.
And that's telling you that's occurring in that 5-minute candle. So that's moving up and down extremely volatile the entire time for that 5 minutes. So people get so shaken out and chopped up. But, in terms of bookmap and how I use that, yeah, that's it. I just look for liquidity being added higher, lower, and continuation. It's hard to use, though. I will say that the order flow as a beginner, I think beginners should probably stay away from the order flow in the beginning and just kind of get used to the candlestick chart, because it might be too much noise. There's a lot of, spoofing that goes on, and bids and offers being added and removed. Like, what's real? Well, how do I even read this? What is CVD? What are these icebergs and stop orders and all that stuff? So
Yeah,
it can get a little bit confusing.
which just shows how deep it goes. There's two sides to it, right? One is the strategy, like as a newbie, plot levels, and I would say 100% agree, like focus on the chart. If you are going to look at order flow early, do your homework. I always say, like, understand, what is an iceberg? Why do people use icebergs? Understand, right, when you're talking about putting that after we break through a sell wall and people put up a bunch of bids, right? If you don't get why that works, like, understand, like, why would someone want to support the price after we break through a new level? And how that can run away, why the price will curl over, right? There's all these different mechanics, and it's just more information to think about, right? As a newbie, you can be overwhelmed, and it can actually, I think the example you gave, where they'll bid right up to, there's liquidity on Bookmap, and then the price will get bid right up to it, right? Maybe 2 or even 1 tick away, and then it reverses before it ever gets there. I see people get smoked by Bookmap all the time. That happens. Like, why didn't it get there? And it's like, well, that's just an order, right? It's not a promise, right? Somebody wants to transact at that price, and the market has to support that happening. So you always should look at market structure first, in my opinion. Market structure is where participation has happened, and then everything else is information about what might happen next. And then you kind of, as a trader, we have to fill in the blanks. Cool. So want to move on to what to do when you hit a max loss or a losing streak. What are your tips for that? How should people, what should they do? Let's say you're hot, you're 4 trades in the day that maybe you're green, and then suddenly you just have a huge loss. You've lost all your profits. Now you've hit your max loss for the day. What do you do in that situation?
If that was that situation, I would immediately get up. I would get up, I would turn off my broker, I would turn off the charts, I would get some fresh air, and I would say, hey, I'm going to come back tomorrow, or maybe if you really need to, come back 3 hours later and see what the charts are saying, because I'm telling this from experience, and you can attest to this as well, that if you are in that mindset, you are going to start to make things up in your mind that don't actually exist in the charts, and you are going to lose even more money. You're going to try to convince yourself that, if you're down $500 and your max loss is 500 and the market's selling off and you're in a long position, you're going to say, I'm going to start buying every single dip. Like, it has to bounce, and you're just going to start making these things up in your head, and it's going to be a huge rabbit hole of losing money, more and more money. And ultimately, beginners, I've talked to so many people that have blown up their entire account in a single day. They'll be trading for a month profitably, and then they'll lose the entire month's worth in a single day.
Yep.
So just get up, have some discipline, have some rules where if you hit this loss, you're done. That's it. Professionals at firms that trade for, huge firms that manage millions of dollars of capital, they have risk management professionals that actually shut off their brokers if they hit a certain amount of loss. They don't care how good those traders are. They don't care how probable they may have to get that loss back during the day, they just shut it off. It's done.
Yeah. And that's good. I mean, you honestly have to treat this as a business, and, think of like if you had someone standing behind you, or whatever thought experiment you have to do to make it work for yourself. But yeah, I mean, and I struggle with this. I think every single trader on earth struggles with this, guy. So we're saying it. It's harder to do than it is said, right? But you have to do it. I mean, I have written up here, I have some rules, which I'm going to share in the Discord, but, I have a max loss per account. And then if I have 3 losing trades in a row, which is about it, I definitely have brought it back many times after 3 losing trades in a row. But I was asking myself, like, what is a number? What should the cutoff be? And I'm just like, even when I do bring it back after 3 losing trades, like, I just don't feel good. I'm not in a good mood. I'm not happy about the day, right? Maybe I lose 3 times and I come back and my P&L isn't as good as it should be, So it's like, what I should have done, right, is not have traded those first 3 trades. And most of the time, when I actually look back and review my trades, I realized that I wasn't following my plan. I was doing something else. I was influenced by whatever I was saying on Discord, or, the news, or something else. But ultimately, I was doing something I shouldn't do. And that's what this is about, right? It's not about your P&L. When you hit your max loss, get up, is the best advice for sure. Just don't look at it. I can't tell you the amount of times I've gotten up, and this is going to happen, right? You're going to have a losing day. You're going to have some thesis that maybe something will happen later. You'll get up. The market's going to go crazy, and you're going to feel a huge amount of FOMO because you lost money and then you left. It's going to happen. But I can tell you guys, the market is open the next day. There's going to be another big move, right? Like, this has happened to me so many times. Like, it literally doesn't matter. Like, there's always another big move. There's always another setup, right? And if you waste time, like energy, on those last ones, I mean, you just go into you just keep digging a hole, right?
Rage.
You'll dig yourself out of. Yeah, rage. Revenge trading.
Yeah. Yeah, I mean, I agree with you completely, man. It's, I think that's the biggest problem with most traders, not even beginners, even experienced, is that, one, it's the ego aspect. When you're losing money, you feel, especially if you're a competitive person, you feel like you're a failure, and that you need to, there's something wrong with you even, or some problems like that, and that you need to prove yourself that you're better than being a failure or losing or whatever. So I think so much of it is just, 90% psychological, and that's why most people ultimately have a hard time retaining profits, and like you said, a lot of times you'll break your own rules, and you look back at this trade and you're like, what was I even doing? Like, why? Why was I even taking that trade? And the market's always open. Go back in the past 2 years and look at how many opportunities there are to take actual good trades that aren't a waste of your time. You're not an algorithm. You're not going to be able to, 99% of people are not going to be able to scout these. Just look at the charts right now. They're not going to be able to sit here and do back and forth, red, green, red, green. It's really just gambling, because the people that trade that aren't even people. They're algorithms that have very sophisticated math attached to it, right? Some kind of edge or statistical analysis. They're not gambling. They have an edge there. So, as humans, we have to be much more selective and precise, and rightfully so, because, one, we don't even have billions of dollars of capital moving around, or millions. We can be more precise and selective, and get more money out of our investments, our risk. That's why, like you said earlier, be smart with the trades you take, and don't just try to take everything in the book. Look for those high quality setups. Look for those levels, and I guess, if you're losing a lot, maybe you should just take a day off, even take a week off. I talked to a trader recently who lost, he messaged me, he lost $200,000 trading, $200,000. And that was all of his profits he made. And he lost all of that in a few weeks. And it was just using oversizing, breaking all of his rules, and trying to, he felt like a failure from his first loss. I forget what his first loss was on that account. It was like a huge loss. It was like a 20, 30K. He never had a loss like that. And then his mind at the time was so deep in that rage and like revenge trading that he was like, you know what? I want to make that 30K back quickly now. So I'm going to double down, which, if you know anything about betting for anything, if you're talking about any type of gambling, sports betting, whatever you want to do, that is the worst thing you can possibly do ever. Because your risk of ruin in math, there's in a betting probability, this thing called risk of ruin. It's your probability of actually going bust. It actually increases as you start to double down and you don't have that any back test statistical edge, which, as a discretionary trader, you don't really truly have anything back tested, like a firm might have for some very statistical analysis of the market. You're just going off of your intuition, off your experience and things like that. So yeah, very bad idea. I see that all the time. Another thing I want to say too, for managing your max loss, you could play it like a game. Like you said, the market's kind of like a game. You could have 3 tiers, let's just say, of your max loss for the day. So you have like a very soft tier that once you hit it, you might get off for 30 minutes. You come back another 30 minutes. Okay. And then you might have like a medium tier, like where if you hit this, okay, you're done for 2 hours, and then you look for another trade coming back after 2 hours. And then you have your, your true max loss where you're done for the day, or you're done for like 1 to 3 days or something like that. I could even see somebody tiering the loss amount and being disciplined with that, because you do need to come and take a break, because the charts from 9:30 a.m. will look way different at 12:30 p.m. and then at 2:30 p.m. It's huge differences in what you can see and what your perspective changes. So
Exactly. Yeah, it's all mindset, and I'll just plus one that. I'm not gonna add too much more in my opinion. I mean, I agree with literally everything you said. I've suffered massive losses. I've suffered not massive, but like big intraday losses, even where, if you really want to make it back, my best advice is leave for a few hours. You'll come back clear-minded, and you're like, oh, here's a trade. And then boom, that's literally the only trade you should have taken. But, you wanted to do all those other ones like an idiot. So we're coming up on around 35-ish minutes. Where can people find you? Yeah. Where can people find you? What are you working on? I know you have a YouTube channel.
I do.
Maybe you have a Twitter. Maybe just people can find you on Discord, but where can people find you, and anything else you want to leave for the viewers today?
Yeah, I appreciate that, man. So you can find me at twitter.com/salttrades and youtube.com/salttrades as well. I haven't been, very active on the YouTube. I do post occasionally on the Twitter. But yeah, that's where I leave my thoughts. I'm going to definitely make some more videos in the future. I'm currently finishing up my university and just kind of locked in out of time. So making those videos gets a little bit busy, as you would know yourself. So might need to outsource that to somebody. But yeah, man, I had a great talk. I appreciate the discussion we had here, and I hope we can do something like that again in the future.
Yeah, definitely. We can, I'm thinking about maybe, we can, if we want to do like a panel or something like that, I'd love to have you on, or whatever we want to do in the future. But yeah, man, I appreciate you hopping on today. Sol is very, very active trader and loves sharing information, guys. Like there's a huge amount of information on the internet. I'm making content, a ton of other people are making content, but it still requires you doing your homework. Even when people like me and Sol are out there helping you. I mean, there's a lot of, self-agency that's required to actually be a good trader. So don't discount the amount of time that you're going to have to do, and just sitting down and it's literally like homework. Like I'm 32. I don't have to do this. I make good money, but like I love trading. And if you really want to be a good trader, then all the stuff we talked about today, expect, let's just say 4 hours per bullet, per thing, right? At least just to grasp it, and then all the time after that. But I digress. Yeah, man. Well, I guess we'll leave it there, and I will see you in Discord.
Absolutely. Thank you so much, man. Appreciate it.